And I'm going to show you a very simple, easy strategy that you can implement right away to explode your results. So really quickly, before we jump into it, I teach a concept called the 3 market phases. And I go in depth inside my membership area, my course about it, but just know that there are 3 phases that make up all market cycles. 1 is a contraction phase, 2 is the expansion phase, and 3 is the trending phase. Your ability to be successful as a trader is you've got to recognize what phase the stock or Forex pair or futures pair or crypto, whatever you trade, you've got to recognize what phase it's in. And once you recognize the phase that it's in, everything else becomes so easy. So we're on paint. Now, a lot of you probably, for your option trades, trade something called the TTM squeeze. What I want to do really quickly is, let's say you have, most people, they look at these moving averages going up, and then the stock is going up, and it starts to consolidate, and then down here at the bottom, you've got a squeeze. If you don't know what the squeeze is, I have tons of videos on this channel related to the squeeze. Okay, so what I want you to do is, when you see a squeeze on the chart, you're going to end up drawing a box around that consolidation, because in essence, that is phase 1, the contraction phase. Now, whenever you draw a box, you are going to project a line right in the middle of that box out to the right, okay, out to the right. So you're going to draw a box, you're going to project it out to the right. Now, like I mentioned, well, in several of my videos, and I teach my students, is the first thing you need to do is establish a bias, right? Do you believe the chart is going to be higher in the future or lower? There's many ways to do that. I know I teach a very specific way in the course. I'm not going to go into detail how you do that in this video, but you need to pick a direction. So let's just pretend that this is Facebook. Doesn't really matter, but let's say my bias is up. Then what I'm going to do on my entry time frame, whatever your entry time frame is, you're going to find the squeeze, you're going to draw a box around the consolidation, you're going to project the line. And if your bias is up, you are going to wait until price is underneath the box or underneath the line. And then what you're going to do is you're going to use that histogram on the TTM Squeeze Pro or the MACD or the Radian Fire Pro, whatever you use, you're going to use that as a way to get into the trade, okay? So what you're going to do is you're going to think of your trading as an inventory, and you're going to get in under value. So you establish a bias, and then you're going to, on your entry, you're going to draw a box around the squeeze, the consolidation, draw a line, and when it's underneath that line and you got that shift in momentum, that's where you're going to enter in the trade, right? You're going to collect your inventory at a discount so we can sell it higher in the future. So what I'm going to do right now is I'm going to share with you several trades that we took on Thursday of last week, so you can really visualize what I'm talking about right here. So let's go ahead and jump into the trades that we took about this concept. This is the first trade. Now, bias was up. So based on the methodology that I teach, you gotta establish a bias. And then once your bias is established, you trade in that direction. So I had a bias up on STLD. And then let me just show you really quickly. And so we're talking about the concept of buying under value, right? We're talking about find your squeeze, draw your box, get in under value, okay? So these are my boxes, these are my boxes, these are my boxes, and you draw that line out and under value. So in this particular case, histogram, TTM Squeeze Pro histogram shifted from red to yellow. We bought right there on that green candle because it was under value, bias up. So let's go ahead and show you the return on that trade really quickly. All right, so that one was STLD. 170, sold it the very next day for 490. I believe that was a 188% return in one day. Okay, so let me show you another one. VTR. Okay, so, and I'll show you the chart in a second, but VTR we took the same day. $1.20. Sold it for $2.20. So we get our calculator out. $2.20 minus $1.20. That was an 83% return. So 83% return, 188% return. So we go look at that chart, VTR. So VTR, we had a bias up, okay, based on the methodology that I teach inside the course. My bias was up, so we're only focused on the long side. And again, drawing your box. Here's the squeeze. Here's the box that I drew, projected my line out, okay? Got in on that green candle. That shift, so all the retail traders are going short. I stepped in long, 83% return in 1 day. Let me show you another one that we took, FCX. Bias was long, based on the methodology that I teach. So monthly was up, weekly was up. Obviously, it was clear to the upside. This particular case, I got in right here, under value. It went up, went down a little bit, but everything stayed the same. My bias was still up. I added right there, so I got in 1, 2. Okay, momentum was still climbing. We were undervalued. So took the trade, added, and I actually sold right up here at one of my liquidity line targets. So FCX got in the first trade at 210. Second one I added 212. Sold them both for 414. A 96% return. And in this one, it was like 2 days, but the majority of it was 1 day. So 96% return. AZN. We took several that day, but again, bias was up, right? Again, number one rule, right? Forecast buyers and sellers. Where's it going to be? The buyers up, bias up. So then on the, this is the 1 hour chart, by the way. What I did was I recognized the squeeze, drew my box, got the line, undervalue, retail traders are going short. I jumped in right there on that shift in momentum, the opposite of what retail traders do, undervalue, boom, came right back up to one of my value lines, which I'll resistance, and it was Friday. It was up here, I got in down here, so I said, you know what, I'm just gonna take my money and run. That was AZN. 149. Sold it for 320. So if you do 320 minus 149 divided by 149, that's 114% return. So 114%, 188, one of them was 90 something, one of them was 80 something. That day we did 512% in 1 day using this methodology. If you'd like to learn more about trading options, I encourage you to check out my Options Elite Masterclass and all the bonuses that I'm giving away this month, like my TTM Squeeze course for free, plus that Forecast Pro indicator. I'm giving that away free this month to anybody who gets my Options Elite Masterclass. So check down below in the description if that interests you. Now, if you like the TTM Squeeze Pro indicator, click right here.